If you include the upfront capital of $6.4 billion, the sustaining capital of $3.2 billion, the reclamation costs, the operating costs, net of copper and silver credits, you can now show a project that has an all-in cost of production of about $600 an ounce. My name is Rudy Frank, and I'm co-founder, chairman, and CEO of Seabridge Gold. When my colleagues and I formed the company in October of 1999, our mission statement was to create the industry's best leverage play to a rising gold price. And we've done that through the concept of growing ounces in the ground faster than shares outstanding. If you look at us today, with over 2 ounces of gold in the ground per common share in all resource categories, we provide 5 to 50 times more gold ownership than anyone in the industry. And what this translated into is what we were hoping for. Our share price significantly outperforming the price of gold and other gold equities. Over the past 23 years, while the gold price is up about 500%, our share price is up over 6,000%. That's what we mean by optionality and leverage. And it's not just about gold anymore. Along the way, we also found a lot of copper. In fact, if you look at Seabridge today in terms of copper resources per share, excluding all the gold and the silver we also report, we have nearly 700 pounds of copper per common share, which is far more copper ownership than the leading copper companies. I'm going to spend today's brief talk on our Ksm project, which is the most important asset we have in the portfolio, and an asset that we've now spent over $500 million over the past 10 plus years, advancing it to the point where not only is it the world's largest undeveloped gold and copper project, as measured by reserves and resources, but it also is probably the most capital efficient big project out there now as a result of the updated preliminary feasibility study we just announced. In addition, what also makes this project unique is that we've successfully have gone through the environmental assessment process with permits in hand, and also we've started early site construction for this project, getting it ready for a handoff into a joint venture. The project is located in northern British Columbia in an area called the Golden Triangle. We now have the big mining companies showing up in this region, making recent acquisitions, including the likes of Newcrest, Newmont, and Teck Cominco. At KSM, to call it a project really does it injustice. This is a district. We have 5 deposits at KSM, which collectively give us over 11 billion tons of economic resources. 3 of the deposits can be mined successfully as open pits, Mitchell, East Mitchell, and Sulphurets, whereas the Iron Cap and the Kerr deposits with the higher copper content can be mined as large underground block caves. These 5 deposits collectively give us over 100 million ounces of gold and over 50 billion pounds of copper. We finished a pre-feas on this project in 2012 that was used as the basis to achieve our environmental certificates. We received the environmental approvals in 2014. And in 2016, we updated the pre-feasibility study to incorporate the changes we made as a result of the environmental assessment process, as well as changing metal prices and exchange rates. On August 8th, we announced an updated pre-feasibility study, which captures the 5th deposit we now have, the East Mitchell deposit that we acquired from Pretium Resources in December of 2020. 2 big changes and the updated pre-feas. Number 1, which I mentioned, is incorporating East Mitchell. And the second update improvement was to increase the throughput capacity from 130,000 tons a day to 195,000 tons a day. This resulted in a 90% increase in the average life of mine gold production. We can now show a project that goes on for more than 30 years, producing over 1 million ounces of gold a year and nearly 200 million pounds of copper. But most importantly, if you look at the change in economics, this project has vastly improved from every measure of profitability. We're now looking at a project where the after-tax net present value has increased from 1.5 billion to 7.9 billion. The after-tax IRR has more than doubled to over 16%, and the payback period has been cut in half. But probably the most important statistic on the new numbers is the total operating costs over the life of the mine. If you include the upfront capital of $6.4 billion, the sustaining capital of $3.2 billion, the reclamation costs, the operating costs, net of copper and silver credits, you can now show a project that has an all-in cost of production of about $600 an ounce. And when you compare that to the industry today, the gold industry in the most recently updated quarterly reports are now projecting an all-in sustaining cost as an industry well above $1,000 an ounce. The all-in sustaining cost at KSM will be half of what the industry is producing gold for today. In addition to the updated pre-feasibility study, the technical report also shows what can come after the 33-year mine plan from the pre-feas by going after the higher grade copper deposits at Kerr and Iron Cap. The updated study shows an additional 39 years of mine life beyond the original 33 years, capturing 23 million ounces of gold and 16 billion pounds of copper. And because this mine plan actually is more copper than gold, when we report the all-in cost of production here, net of byproducts, we can show a project that from a copper perspective has an all-in cost of production of $1.44 per pound of copper, well below what the industry is making copper for today as well. And when you look at the combination of the net present value from the 33-year mine plan under the pre-feas and the new net present value that will be calculated at the start of the second mine life, you're looking at a project that generates after-tax net present value is well above $10 billion. The change in KSM as a result of East Mitchell now is a game changer for us with respect to our ability to bring a joint venture partner in to develop this mine. We've been talking joint ventures for a number of years. We have received a number of proposals from some of the larger companies on the planet. We believe that the environment right now is ripe to get a deal done. We have a number of the largest mining companies under confidentiality agreements, and we would hope to have a deal done with them within the next 12 months or less. And one thing I didn't even touch on today, another reason to invest in Seabridge, is how successful we've been on the exploration side. We have 3 earlier stage projects in the portfolio, that any one of which can be a company maker. And I would point you to taking a look at the Iskut project in northern British Columbia, which we believe can be another KSM as we advance exploration activities on that project. Thank you for your time today. I stand ready to answer any questions. Best way to reach me is by email. My email address is Rudy, R-U-D-I, @seabridgegold.com. And also we have a lot more information available on our website. So until our next encounter, thank you very much.